Hi everyone, and welcome to the May edition of Just Jackie. The days are getting shorter, winter's creeping in, but there's still plenty happening in the world of finance. So let's get into it. Let's dive right into the big headline, the Reserve Bank of Australia. The RBA is set to meet again on May 20th, and based on current indicators, we're predicting a 0.25% drop in the official cash rate. That would bring the rate down from 4.10% to 3.85%, marking the second cut in this cycle. So, what does this mean for the banks and, more importantly, for your home or investment loan? Well, this is the part where things can get a little tricky. Traditionally, when the RBA lowers the cash rate, the banks see this as an opportunity to claw back some margin. It's all to do with their net interest margin, which right now is at record lows. So even though the RBA is lowering rates, banks may not pass on the full 0.25% reduction. In fact, in many cases, they'll keep some or even all of that rate cut for themselves. That's why it's important to stay on top of your loan. The banks aren't going to call you up and tell you that your rate's not competitive anymore. And that is where we come in. If it's been a while since your last review, this is the perfect time to book in a free chat with your broker. Let us do the homework for you. Now let's take a look at what's happening with interest rates across the market. We've pulled together some standout offers from a few of our favourite lenders. And remember, we've got access to over 60 lenders, so there's a lot more where this came from. For home lending, Bendigo is offering a principal and interest variable rate of 5.69% with no annual fee, or 5.74% if you'd prefer an offset account. Macquarie is coming in strong with a 2-year fixed rate at 5.19%. For investors, MoveBank's variable rate sits at 5.84%, while MeBank is offering a variable interest-only loan at 6.14%, and that even comes with a $3,000 cashback. Macquarie's 2-year fixed for principal and interest is at 5.35%, and AMP has an interest-only fixed option at 5.59%. Of course, these are some of our lowest headline rates, but depending on your goals, structure, and borrowing power, other options might suit you better, especially if you're looking to borrow that little bit more. In those cases, some of our trusted non-bank lenders like MA Money, Liberty, and Pepper could offer the flexibility you need. Again, that's something only your broker can help you with, so make sure you book in your free chat. Now let's switch gears for a moment and talk property, because there's been some fresh movement on that front too. Following Labor's recent election win, we're starting to see a clearer picture of their housing commitments. They're investing $10 billion into building 100,000 new homes, specifically for first home buyers. There's also $2 billion in funding headed to state governments to support new housing projects, and $800 million going into the Help to Buy shared equity scheme. We're also seeing an expansion of the home guarantee scheme, with more 5% deposit options becoming available for a wider range of borrowers. And for anyone still carrying a HECS or HELP debt, there's good news there too. Lenders are being encouraged to ease credit policies, making it easier to get a foot on the property ladder. All of this adds up to more opportunities and more support, especially if you're a first home buyer. So if you're in the market or just starting to think about it, have a chat with your broker. They can definitely break down your options and help you find the path that suits you best. Now, if you're a previous Lydian client and you loved the experience, we would be so grateful if you shared this with your friends and family. Referrals mean the absolute world to us, and they help us keep doing what we love, supporting people just like you on their finance journeys. That is everything from me. Thank you so much for watching. Have a brilliant end to your May, and I'll see you next month.